Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at stocks, gold, and Forex, and also roping in interest rates as well to today's conversation as we continue to see some price extremes in S&P 500, gold making fresh highs amid some news coming out of Powell and a recent inflation rate here in the U.S. And you have the U.S. dollar seeing another resurgence of strength against the euro and a whole host of especially European currencies as the dollar is appreciating against euro, pound, and Swiss franc in recent trading. We'll get to that in just a second. But let's start with the stock news as S&Ps are hitting new highs here. And it was mostly an intraday trade. You could have seen the futures open going into the month of April was very bullish for U.S. equities, and some of this bullishness coming out throughout the April 1st stock session, but still right there near 5,300, which would be another huge major level for S&Ps. But what's really interesting about the price action in this market, and it makes sense for a couple of reasons I'll get to in a second, is it's having really no trouble moving through big numbers like 5,000. I mean, look at that. We spent just a couple of days near that 5,000, moving through 5,100, 5,200, and now trading around 5,250. The futures got through 5,300, but the index itself nearing that 5,300 number, and not having any trouble really pressing through those big numbers, which makes sense because keep in mind this isn't like a gold or a crude oil or an interest rate market even, whereby those markets are one, singular markets, and two, the price levels for those markets are quite meaningful, as well as Forex markets. 108 in the euro and printing around that big level has a lot more downstream effects on so many financial institutions that need to hedge than 5,200 versus 5,300 in the S&P, as those big numbers are, like I say, quite meaningful. The S&P, keep in mind that the index value is completely arbitrary, and not only is the price of 5,300 completely arbitrary, because you have Dow Jones's 40,000, Nasdaq has its own pricing convention, the Russell has its own pricing convention. So those prices don't really matter for anything aside from just letting you know if you're invested or not, how much you've either returned positive or negative in whatever time span. But also there are 500 stocks in there that have their own price levels that are meaningful. And so it's hard to necessarily say, oh, it's going to see some resistance around 5,300. This S&P 500 has felt very, very healthy at each major level and now eyes 5,300, as opposed to this gold market that, might have some trouble and has in the past. You can see how many times we got up to $2,000 and then moved off of $2,000, couldn't really break it. But this most recent instance, my friends, it has had no trouble breaking through 2,000, 2,100. And now in the most recent trade in the last week, this gold market has appreciated from around 2,150 to 2,250. And in the overnight session to start April, March 31st, going into April 1st, gold futures got all the way up to 2,280, 2,290, really getting close to this 2,300 number, which is also an all-time high. I should have said that. S&P's all-time high, gold all-time high, as both these markets moving with a relative positive correlation, as investors are, from what it seems like, and we'll get to some of the nuance behind this price action, investors are just reaching for assets to buy here. It seems like to start off the month of April, and S&Ps and gold, as well as some energy markets, which we're not covering today, but is worth looking into, are starting this new month on a bullish tone for sure. And it's hard not to when you have statements like this from Fed Chair Powell saying that the U.S. economy is growing at such a solid pace. He remarked about how employment and GDP and the U.S. data points are doing so well here to start 2024 that they're not necessarily in a rush to cut interest rates, which you might think, I mean, a year or two ago, this type of quote, which spurs interest rates higher or delays interest rate cuts that everybody is looking for, you would think, oh, well, if Powell is saying we're not in a rush to cut rates and interest rates are moving higher, well, then gold and S&Ps must be getting punished. But we've got this weird market right now, and not weird, it is what it is. Correlations change, relationships change. But to start April off, you have the stock market with a relatively bullish tone, the gold market a very bullish tone, and interest rates also moving higher as, again, it's this idea of strength across several asset classes and investors and institutions almost reaching for whatever asset is underperforming the other asset to buy anything in this market where there's just strength all over the place, especially in terms of U.S. equities, U.S. interest rates, and U.S. dollar that we'll get to in just a second. But really weird start to the month, like I say, where you have interest rates moving higher, as well as the stock market and the gold market, as all boats being lifted for at least the time being. We'll see where it goes from here. But yeah, just quick remark. You have the projections here for June. This is all the way out now in June. The probability of a rate cut is now down to around 58%. And in recent weeks and months, this has been as high as 70, 75% and beyond. It's all the way down to almost a 50-50 shot of not even a rate cut maybe in June. But we'll see more on that to come, because we're going to have more information around stuff like inflation. And this was one that was good, but maybe not as good as people would have liked. U.S. inflation rate is the lowest since March 2021, and down to 2.8%. This was the PCE rating that just came out. And of course, in the U.S., we usually look at CPI and PCE. So all good things, but still not 2%. 2.8% is still far away from that 2%, especially at the most recent rate of decline. You might say, oh man, that's a nice stair step lower and lower. And it was a nice bit of downside for inflation from May to June and July to August there of 2023, as we went from 4.6% to effectively 3.7% in that time, almost dropping a full percentage point. But you look at the last couple of months here of movement for this inflation rate, and it's continuing to move lower, which is good, but only by 0.1%, 0.2%. And so by that rate, inflation in the U.S. might not get down to 2% for another several months. And to Powell's point, he's saying, hey, the U.S. economy is looking so strong that we're not necessarily in a rush to cut interest rates. And so you have, this interest rate market that's holding strong, that's moving higher, as well as stocks and gold. As the strength is just being seen across all these asset classes. And to top it all off, you're seeing the strength in the U.S. dollar asset class as well, appreciating back to recent highs against the euro, against the pound and Swiss franc, especially those European currencies, but also, right there near its highs against Japanese yen and Australian dollar as well. For at least the last couple of months, you have here euro breaking down below 108 and seeing lows that they haven't seen for the last handful of weeks. And if we see more downside, 107 is really the low for this euro for the last couple of months. And not only are you seeing the U.S. strength, but you're seeing ECB policymakers and Bank of England policymakers and central bank policymakers in Canada and Australia alluding to the fact that rate cuts are likely to come. And in the European Central Bank, they said that they might come before the U.S. So not only are we getting kind of the nuanced effect of, could so-and-so cut rates before the U.S., the ECB is coming out and saying it. They have policymakers that are directly speaking to the fact that they might cut before the U.S., and thus you're seeing the dollar strength as well. So hell of a start to the month of April here. S&P new highs, gold blowing through all-time highs, and even the U.S. dollar moving back to some recent highs as well. We'll continue to monitor how these trends develop for the rest of the month, but so far, pretty bullish.